Here we go. All right, episode 7.5. Just me flying solo today. Ryan has dropped from a little bit of cold, I think. Everybody's dropping like flies that time of year. Stay safe out there. So I'm going to go solo. I've got a little whiskey to join me today. Got some Ardbeg to celebrate a new MicroStrategy all-time high on market cap and ranking for U.S. public companies. So that's on my Twitter feed. I'll probably connect it to this. But yeah, so the goal for today, I want to make this quick, short and sweet. Got a lot of new followers since we've done our original Quant Bros episode. So I wanted to share some of my thoughts and kind of summarize all of my thesis and information into a little bit of a quicker, heavy-hitting episode. And I will share the visual chart that a lot of you love. So this is going to be very visual for those that are listening to this on audio. Might be a little tough to follow along, but I'll try to, get people into it without that may not be watching it at the same time. Okay, so here we go. A little bit of background about me. I am a reinsurance broker. So in my day-to-day job, I am selling insurance to insurance companies. The reinsurance market itself is very unique, right? It's a very niche market. We're there to protect against catastrophes and reduce volatility of insurance companies. So you can think about Hurricane Helene or any hurricane or wildfire or tornado that happens. Generally, most of those large catastrophes are mitigated on insurance company balance sheets by purchasing reinsurance. So, in my world, I think a lot about probabilities, right? Probabilistic distributions of events and how to reduce the volatility on an insurance company's balance sheet from, purchasing reinsurance. So in my day-to-day job, I'm kind of structuring financial transactions to offload volatility on insurance company balance sheets. My background, I am an econ and business double major. Graduated kind of at the top of my class, studied finance, and my name PunterJeff. I was also a punter in football. I have a 74-yard punt somewhere in my feed, and ton of fun. So without further ado, I'll kind of get into my perspective on how I view equities and Bitcoin and get into it. So I'm going to share my screen here. Okay, so this is updated. This is some updated information as of 10/3/2024. So what I wanted to do is compare the top 20 U.S. equities based on metrics that traders or algorithms are generally looking at. So, the reason I bring this up and the reason I look at this is because, what is a stock? What is an equity? How do you value an equity? And the purpose of showing this, the top 20 U.S. equities, because I wanted to show, there's no single homogeneous metric to compare any of the top publicly traded equities. So if you take a look at PE ratio, for example, you'll see that PE ratios vary drastically, anywhere from 10 for Berkshire Hathaway up to 30, 50, 130, 110. So, there's very different there's a multitude of different ways to look at earnings and how the price scales relative to earnings. A couple other different things. You can look at this net asset value, or this is also commonly referred to as book value. So this is the total assets minus liabilities. And you can see that the net asset value of many of these companies also varies incredibly widely. Anywhere from 1.6 all the way up to 52 or 51 with Apple at number one. Additionally, you also see that the financial structure of every single one of these companies is very different. They all have varying levels of assets and varying levels of liabilities. So for example, looking at Apple, they've got $331 billion of assets, $264 billion of liabilities. A company like JP Morgan, which is ranking the highest here, $4 trillion of assets, but $3.8 trillion of liabilities. So the reason I point this out is, when I think of what is an equity, what is a stock? In my mind, it is a representation of the productivity of a company's assets. Every single one of these companies is very different. They're all in different sectors too, right? You've got Apple, Microsoft, NVIDIA, tech powerhouses. But then you also have got Berkshire, which is really kind of an ETF of like insurance companies and cash producing assets. It sees candies and all those other things. You've got Tesla, a car maker. You've got Walmart, JP Morgan, ExxonMobil, oil companies, banks, and different tech companies. So when you're thinking about like the top largest 20 assets, how do you compare them? And really, the only way to compare them is market cap relativity. Because as you can see, they all have different PE ratios, they all have different book values, they all have different types of assets and different types of liabilities. So really, the only true comparison is market cap, where you can look at relativities. So is Apple worth more than Exxon? Should Exxon be worth more than Apple? I think it kind of comes down to simplicity, right? Especially with some of these really large publicly traded equities. It comes down to where does humanity want to store their energy? What equities do most people want to buy? And this kind of comes into play with how the design of financial markets. And I bring this up a lot, and this is incredibly important. So I think a lot about the design of financial markets, because all financial markets are different and operate a little bit differently. You think about the design of the equity market. How does the equity market work? Or who are the large players in the equity market, and like why are people pushing their money into the equity market? So when you think about in my industry, insurance, what is an insurance company? An insurance company takes in premiums from consumers of the insurance product, and then they park that money in assets to meet a future liability. Those insurance companies are parking those assets in various different things. They're parking them in equities, bonds, treasuries. It's all a function of when they expect to pay the liabilities at some point in the future. Think about a bank. A bank is very similar, or a pension fund, or anybody that's purchasing stocks in their 401k or IRA or any retirement account. They're putting money in generally to kind of diversified index funds for some point in the future. Now, I bring this up because the S&P 500 makes up 3 out of the 5 largest trading ETFs in the entire world. You have global companies that are purchasing the S&P 500 as a store of value because they are, they want to buy publicly traded equities, and historically, the S&P 500 has outperformed, the cost of capital or M2 money supply. The reason being, it's a diversified fund of 500 companies, and it's kind of set it and forget it, and it's a good savings vehicle for some point in the future. So there are other diversified mutual funds or ETFs out there, but S&P 500 is the largest, represents 3 of the 5 largest ETFs in the world. But NASDAQ 100 is another really big one. It's the 5th largest ETF in the world, and it's important to think about this fundamental structure, right? And you've got a large portion of the entire globe that is investing in these mutual funds and ETFs without thinking about it. These are agnostic buyers. They're parking capital in these vehicles, and when they park the capital in those vehicles, those dollars need to purchase each one of these underlying equities in order to match the index performance. Okay, so we've got that. Now, zooming in a little bit, think about the design of the S&P 500 or most index funds. Most index funds are market cap weighted index funds. So what this means is the relative percentage of each one of the underlying equities in the fund is a proportion of its market cap relative to the market cap of the entire fund. So when we look at some of these larger companies, you can see companies like Apple, Microsoft, Nvidia, Google. They're materially larger than the number 20th ranked equity in the US market, right? So Costco is trading at $391 billion. Apple is effectively 10 times larger than Costco. So its relative proportion in the index is 10 times larger. So the reason I bring this up is as companies go from a small proportion in the index to a larger proportion in the index, the relative weight that they make up of the index increases exponentially. It's not linear, right? So if Costco were all of a sudden to get up to $1 trillion, there's kind of this like reflexive component where when you get to the top of the leaderboard, there's more money that is chasing the top performing equities. So most of sophisticated finance is aware of this. And I think that's why we see a majority of these top companies stay in the top. And they call it the Mag 7, right? Or the top performing equities kind of stay at the top. Historically, 15 years ago, the top performing equities were all like oil companies. And so over time, tech and data has overtaken oil in terms of popularity. So as the history has changed, right? As modern history has changed, data has become more valuable than oil, and everybody can see it on the horizon. These tech companies were thrown up to the top of the leaderboard and held up at the top of the leaderboard because of the design of the financial markets. And additionally, when you have companies that enter into the S&P 500, their credit quality also improves. So you have, because you are aware that there's new buyers from anybody purchasing index funds, index ETFs, this is a new level of financial strength that each one of these companies can afford. So all of a sudden you can start reliably doing at-the-market shares, share purchases. So you can sell shares to the market because you have buyers there from the S&P 500 and raise capital to do whatever you want with your operations. Additionally, you can raise debt, whether it be convertible debt, regular traditional debt. It's a new level of financial strength because you have these future buyers at some point in the future. So why is that important? That's important because you have a company like MicroStrategy that is investing 100% of their cash assets into the strongest, most energy efficient asset on the planet. And what I mean by that is, let's do a quick comparison, right? Let's think about ExxonMobil. Exxon has a ton of infrastructure. Like, their assets themselves can decay. Same with a lot of these other companies, right? Like Tesla or Walmart or even Meta and Alphabet, right? Like, they have assets and like their buildings that they own, the infrastructure that they own, a supply chain that they own is all denominated in fiat currency, and it can decay, and it is decaying, and it's decaying fast over time. And if you compare that to an asset that like MicroStrategy is holding, there's very little decay, there's very little energy loss with holding Bitcoin, right? Like, if you think about just holding a piece of real estate versus holding Bitcoin, the piece of real estate you're paying property taxes, maintenance, vacancy risk. There's significant decay within the entirety of holding a piece of real estate. And alternatively, holding Bitcoin is stored energy for a point in the future. And there's the only decay is really the cost of custody to hold it there. So it's a materially better asset in general, especially compared to all these other equities. Now, again, the reason that's important is because MicroStrategy, as of today, I think it was ranked, 267. I think it was 267th largest U.S. publicly traded company in the U.S. stock market. Before the Bitcoin strategy in like September of 2020 or August of 2020, MicroStrategy was probably the 2,000th largest company in the U.S. publicly traded market. So they've got a massive increase in the relative market cap rank. And again, if you're thinking about the design of financial markets and how they work, if you have a company that goes from very small in the rankings to really high in the rankings, it's not a linear proportion of dollars that's coming in from passive index funds. It's an exponential dollar flows that are coming from these passive index funds that are investing in market cap weighted index funds. Whew, that's a lot. Okay, so hopefully that kind of gets across. Like the way I view equities, particularly at the top of the U.S. publicly traded leaderboard, is these are store of values. There are a lot of these companies are buoyed by passive index funds. Like I think Apple, for example, I think the S&P 500 makes up about 6% of Apple's holdings. Obviously, Berkshire Hathaway is a very large holding in Apple, and that also kind of buoys it up there as well. So when you think about a lot of the narrative around MicroStrategy has been, trading at some multiple of book value. And I think as of close today, the trading on book value is 3.2, about 3.1, 3.2. So this is taking all of MicroStrategy's Bitcoin assets less its liabilities, and this gets to net asset value of $11 billion, and they're currently trading at $36 billion. So multiple on net asset value, or this book value, is 3.2. Now, where can that go? And why do I bring that up? I guess I also bring that up because all stocks are forward-looking. So all stocks and the value of all companies is thinking about what is this company going to be worth 5 years from now, 10 years from now, 15 years from now. And if they have a technological monopoly, there's this forward-looking component where the market sentiment is to buy these companies not for how productive their assets are today, but for how productive their assets are going to be at a point in time in the future. Think about like the iPhone or Microsoft or AI with NVIDIA. That's that sentiment of being forward-looking is what thrusts them to the top of the leaderboard, which makes me incredibly bullish for something like MicroStrategy, right? MicroStrategy is not included in the S&P 500 yet. They're not included in QQQ yet. They're holding the hardest asset on the planet, and thinking about where the hardest asset on the planet can go 5, 10, 15 years from now, thinking about the possibility of it capturing 2% of monetary value. You're looking at astronomical numbers for Bitcoin. $1 million Bitcoin, $5 million Bitcoin, $13 million Bitcoin. So if you think about a company like MicroStrategy holding 252,000 Bitcoin, at some point in the future where Bitcoin's worth $1 million or $13 million, that's a massive number. It's a massive asset number, larger than all of these companies' assets that you see on the screen right now. So that makes me incredibly bullish for the future, and I'm thinking about the design of financial markets. So let's go into what everybody loves talking about, is kind of where this can go. Where did my mouse go? Okay, so everybody loves this table. Everybody's been asking for a table of this. So this is looking at different Bitcoin prices, right? So I wanted to see at different Bitcoin prices relative to how much Bitcoin MicroStrategy owns, and taking a different multiple on net asset value, this kind of forward-looking view, to get an understanding of where the stock price could go if the trading multiple kind of expands or grows in line with some of the other companies that I showed on the previous slide. So, looking in this first section up here, today's multiple is it's trading at about 3x. So maybe let's update that. Let's just say 3x. 3x. So today's multiple is trading about 3x. So if the price of Bitcoin goes up to 80,000 and the trading multiple stays consistent, we would look at a MicroStrategy price of $241. Fast forward, let's say at some point in 2025, the price of Bitcoin goes into price discovery. And at price discovery, it goes until there's Bitcoin that people are willing to sell. With a $250,000 Bitcoin price and a 3x trading multiple, you're looking at a MicroStrategy price of $891. Now, where this gets really interesting is thinking about the nonlinear component of a company like MicroStrategy or any other company that gets added into index funds, market cap weighted index funds. And as they grow, right, you could start to see the reflexive nature here. As the price of Bitcoin grows and the price of MicroStrategy grows, its relativity, MicroStrategy's relativity in market cap weighted index funds is increasing, not linearly, exponentially. So any of that new dollar flow that's coming from these index funds has to purchase MicroStrategy at the market price. So you've got this a lot of people are going to be looking to buy MicroStrategy shares, and I know a lot of people are not going to be willing to trade or sell their MicroStrategy shares because they know the value of what they're holding. They know the value of holding a monopoly with the hardest asset on the planet. So looking at additional multiples, so going down, in the 2021 Bitcoin bull run, MicroStrategy was trading at a 6 times multiple of net assets. So taking a 6 times multiple, again, at a price of 80,000, you're looking at a MicroStrategy price of $470. At a price of 250,000, you're looking at a MicroStrategy price of $1741. Where this gets kind of crazy, right, is you start looking at different multiples, 8x multiple, 49x multiple. During the GameStop squeeze, the multiple on book value that GameStop hit, it was 49x at the peak in January of 2021. This is where the numbers get really crazy, right? 49 times multiple on book value or net asset value for MicroStrategy at a $250,000 Bitcoin price is $14,216. This is crazy, right? I mean, a lot of people would probably sell their MicroStrategy shares if it ever wicked up to something like this. But I think it's really valuable and important to think about what you're holding and the relativity of what you're holding and kind of where it all sits together. So this screenshot here, this screen share, is from the original Quant Bros episode, but I've cleaned it up a little bit and I've made it into a summary table. So I think you guys are going to like this one, where it shows different Bitcoin prices on the, I guess you call this the x-axis here, and different multiples on net asset value here, ranging from 2.5 to 40. And this is using 252,220 Bitcoin that MicroStrategy currently owns. I think they're going to announce that they've purchased another 14,000 within, I think, the next 15 days. And that's from the most recent at the market capital raise of an additional $900 million. So, right, today's price, MicroStrategy, as of 10/3/24, the MicroStrategy price is $177, and the multiple is about 3x. So thinking about where the price of Bitcoin goes, you can go find the price of Bitcoin at some point within here and look at different multiples of net asset value to see what the price of MicroStrategy would be. Some of you guys are probably saying, Jeff, these numbers are crazy. It's trading at $177 right now. Like, how on earth do you get to $3,000 or $5,000? So I also put this table down here below so you can see the relativities here, right? So this is a market cap table. So this is showing market cap at each one of these individual prices based on the multiple on net asset value. So again, if you think of Bitcoin hits $250,000 and let's just say the trading multiple on net asset value goes to 8, you're looking at a $472 billion company. So what is that? That's a price of $2,331 per MicroStrategy share. Now let's think about that for a second, right? A $472 billion company. How does that compare? Let's go back to the very first table here. A $472 billion company would make MicroStrategy the 16th, 15th, 17th largest U.S. company in the stock market. Now, does that make sense? Let's rationalize it, right? I mean, how many Bitcoin do all of these companies own? I think Tesla has 10,000 Bitcoin. MicroStrategy has more Bitcoin than every single one of these companies in this entire spreadsheet. And I've also included this column here, cash on hand, because I wanted to conceptualize who could catch them, right? MicroStrategy's got $15 billion worth of Bitcoin, I guess, let's see, yeah, $15.5 billion worth of Bitcoin. So which one of these companies could catch them if they could catch them? And I've highlighted in kind of this light orange color the companies I think could possibly catch MicroStrategy if they started buying Bitcoin today and the price didn't run away astronomically. In my opinion, if somebody needed to go buy 252,000 Bitcoin, it's probably going to cost 45 billion probably, because as they start buying Bitcoin, it's going to send the price up. So as the price goes up, they would need to start buying and accumulating more and more over time. So I really think the threshold for a company being able to catch MicroStrategy, they probably need $45 billion at least to buy 252,000 Bitcoin. It could be more. It could be 60. It could be 100 billion. We don't really know exactly what that number might be, but it's a big number as the multiple of the price of Bitcoin would expand drastically as these dollars would be vying for the remaining Bitcoin left on exchanges. So it would be a frenzy. It would be a total frenzy, and they'd have to start now, in my opinion. And looking at these companies, so let's think about them. You got Apple, 61 billion, Microsoft, 75 billion, Nvidia, 34 billion, Alphabet, Google. Of all of these companies, Meta is the only company where there is a founder that owns more than 50% of the ownership rights. So in my opinion, Meta is the primary company that I think could possibly catch them, because Zuck could make the decision to buy X number of Bitcoin and just doesn't matter what anybody else says. He has more voting power than anybody else in the company. He's got over 50% of the voting power, so he wouldn't have to convince anybody. He could just do it. All of the other companies on this list do not have a founder that has over 50% voting rights. It's incredibly important. Imagine going to try to convince your board, who consists of Vanguard, like traditional finance folks that are on the board, Berkshire Hathaway, whoever it might be. You have to go convince people to convert 100% of your cash assets over to Bitcoin. And that's an incredibly difficult task, especially with just kind of the general narrative within the traditional finance ecosystem. So, going back to this MicroStrategy summary and thinking about an 8 times multiple at $250,000 Bitcoin price, 472 billion, I think you can rationalize that. I think you can rationalize that there's no company that's going to be able to catch them in terms of their Bitcoin holdings, and you have a company that is effectively a moat of the most valuable holder of Bitcoin at any point in the future. Now, why is that important? You're like, Jeff, it's just Bitcoin. Like, it's just money. Somebody's holding money. It's important because Bitcoin is more than money. It is programmable money. And Bitcoin itself can be used as collateral in any type of transaction. And what do I mean by that? Like collateral. So, for example, Bitcoin can be used as collateral in a loan. Just think of the same way you would pledge any other asset as collateral. Like when you go to buy a house, your house is collateral for your loan. If you don't pay your loan, the bank takes the house. In that situation, the bank would look at your credit quality. They would look at the assets that you hold and see if you had the ability to pay the mortgage. If they felt that you had good credit quality to pay the mortgage, they would give you a loan on your assets, being the house and like your assets, and they would expect you to pay the mortgage. And if you defaulted, they would get the house, and it would go into bankruptcy liquidation, in which case they would take your assets. Now, Bitcoin is just another type of asset that can be used as collateral. So that's an example on the micro scale, but there's also like the very large scale, like big traditional finance, where I think the value of Bitcoin can be realized much quicker, particularly in my line of business in reinsurance. I can imagine a scenario where you've got a big holder of Bitcoin, let's say MicroStrategy or anybody else, any individual single investor. And insurance companies are looking for capacity every single year. So let's just say, insurance company wants to write some property business in the Pacific Northwest, but they don't currently have any business in the Pacific Northwest. But they need a bit of money to start writing business because they think they've got a good business plan and they could make money. They can make more money than they have in losses. So you may need to go raise capital via a loan. We call it a surplus note, where the insurance company is basically borrowing money for headspace, basically capacity to go writing business in that particular location, and they pay off that loan over time with cash flows that they're getting from their business operations. In that instance, I could see a company or an individual investor loaning out their Bitcoin for that headspace in return for a yield. That yield can come in many different forms. I'm not talking FTX yield. I'm not talking Celsius, BlockFi, like bullshit yield on, give us your money and we're going to do something with it and you're going to get paid a yield, aka hypothecation. I'm talking big systemic financial institution yield, where you've got your money lent at banks or insurance companies that if those companies went out of business, the company itself is the collateral, right? Like JP Morgan is the collateral, or any other insurance company is the collateral. There's going to be a whole world of Bitcoin being used as collateral in large financial transactions, and that is 99% guaranteed because it's the most pristine collateral. You can track it. It's global. It's liquid. Yes, it's volatile now, but it will be much less volatile in the future. So it's not just a store of value. It's collateral. It's the best collateral on the planet, and the world is blind to it for the most part, or the traditional finance world is for the most part blind to it. But I think that will change over the next 4 to 8 years, the next decade. So real quick, I'll just briefly touch on this. This is from Quant Bros episode 1 as well. On the right-hand side here, I guess in the middle, you've got, 3 of the 5 largest ETFs are S&P 500. Basically, you got $1.5 trillion of assets under management in S&P 500, those 3 ETFs. And then you've got QQQ, which is the 4th or 5th largest ETF in the world with $251 billion of assets under management. And, Ben Workman has very kindly put this, tracker together to identify where MicroStrategy sits in potentially making the NASDAQ 100 and the potential allocation and future cash flows that would go into MicroStrategy. I have this calculator here just to put some perspective into like what these dollars mean, right? So for example, if MicroStrategy was included at a weight of 0.14%, basically if they barely get into the into QQQ, there would be $461 million that would need to purchase MicroStrategy at whatever price. Now, you say, well, $461 million isn't very much when you think about its current market cap. Those $461 million that isn't just added to market cap. Those $461 million have to buy shares from somebody. And there's a multiple on that dollar flow into how it transforms into market cap. So, historically, you could think of, I think these multiples can be pretty high. It kind of depends on how liquid the stock is and if it's, how volatile the stock is. With MicroStrategy, it's super volatile, and I don't think there's a ton of shares out there on the market. So I could foresee a multiple of 30, 50, or 75, which is outlined here in this calculator, which could result in a $15, $20, $30 billion change in market cap, which could change the price of MicroStrategy $171 in probably less than a month, I would think. And that's if they get included at a 0.14% allocation. As their market cap grows, and you think of these larger allocations, so if they get added at a 0.48% allocation, which is around what PayPal's valued at $62 billion, you're now looking at $1.5 billion of flows, and that could change the price of MicroStrategy $250 to $1,000 in a month, depending on the multiple required, or the multiple that would transpire after trying to buy all of those shares at the market value. So I've called this like the stock float compression theory. There's very little shares left trading at the margin, and the value of the entire equity, the value of the entire company, is the price of MicroStrategy shares that are trading at the margin multiplied by all of the shares available. So if the amount of shares that are trading at the margin goes from a large number to a small number, there's very few MicroStrategy shares left until people start selling them at certain prices, which this could get out of hand. I bring up this concept of like, what is market cap? Market cap is synthetic. It's synthetic because you have the value of the entire company is the value of what is trading at the margin. It's the value of what people are willing to pay for the next MicroStrategy share. Again, if the entire market thinks that MicroStrategy should be the #1 most valuable rated public traded company because it has more Bitcoin than everybody else, then the price of MicroStrategy shares go to the #1 most valued company if that's where people are willing to sell those shares at. So I think all of this is important to think about where it can go. I don't want to be the person that tells my grandkids that I sold MicroStrategy at $50 billion market cap when I think it's going to 10 trillion. And I think it's valuable to consider what the possibility can be based on the structure of the current equity market. And that's probably not going to change much over time. It will change down the road in the short-term foreseeable future, 10 to 15 years. The equity market is not going anywhere. So, where are we now? I like this. Right, what are we? October 3rd. You can see this is where we're at, MicroStrategy price. We are quite literally at the very beginning, right? So MicroStrategy purchased its first Bitcoin on 9/17/2020. They purchased 21,000 Bitcoin, and that was in September. So we're basically a month after September, 4 years later. And quite honestly, I think looking at this price action, it's very similar to, based on where people think Bitcoin's going. Right? We're probably going to enter a bull run here, thinking about interest rates are coming down, we're going into an election, global liquidity is going up, the debt is pretty much insurmountable, the money printer needs to be fired up, yada, yada, yada. So with all of the bullishness on the horizon, and let's say Bitcoin does rocket to 100,000, 200,000, 500,000, we're going to see price discovery and MicroStrategy on the same scale as you did here. It's going to be astronomical if we start to see the price of Bitcoin run away, because the shares of MicroStrategy are forward looking, and if the market is seeing Bitcoin as a price of $1 million down the road, I wouldn't be surprised to see MicroStrategy trading at like a 4, 5, 8, 10x multiple of its book value, just recognizing that all stocks are forward looking. Okay, the last piece, again, try to make it short here. So this is the US market cap rank of MicroStrategy since I started tracking in February. So this is February 27th, 24. MicroStrategy was the 476th ranked US public traded equity. And fast forward today, we did hit an all-time high, 267th largest US market cap ranked equity. Also hit a all-time high market cap of 35 billion today in the Bitcoin era. Obviously, this discards the 2000 run-up in market cap that happened in the dot-com bubble. But all exciting stuff. We haven't hit a price all-time high because there's been this kind of accretive dilution that's happened. But we are hitting a market cap all-time high, which is incredibly bullish, right? This increases the proportion of MicroStrategy in all index market cap weighted index funds. I'm incredibly bullish about the horizon, thinking about QQQ, which could happen in December, and potential of S&P 500 at some point, probably in 2025, after they adopt FASB accounting principles. So, oh man, that was my run through of quickly trying to explain what's going on here. Yeah. What else? Holy moly. A lot of cool stuff on the horizon. I think this is going to be a pretty epic trade. Please do your due diligence. None of this is financial advice. It's just my view, just a reinsurance broker's view of the financial markets and how they work, and the design of these financial markets. Yeah, that's pretty cool. I'm pretty excited. It's kind of crazy sitting on some of this stuff, to be honest. What else do I got? MSTR market cap and US rank. So this is the weekly. I kept track of the market cap at the week end just to try to reduce some of the volatility in seeing the price every single day. So $35.76 billion market cap. We are at all-time high. That just closed a little bit higher than we did last week, and a rank of 267th. The highest rank that we got at any point previously was in March earlier this year, which was a rank of 275th. I think a little anecdote just about Bitcoin and where MicroStrategy can go here is I think the traditional financial world is behind pretty drastically, just based on conversations that I've had with large capital providers that are exploring reinsurance transactions. I think there's very little incentive for large financial institutions and large financial capital providers to explore alternative systems when they've done really well in the existing design of the existing system. So I'm not incredibly surprised that a lot of the traditional financial world, at least that I work with, seems a little hesitant. But I think we will see this changing narrative once the price of Bitcoin passes a few price thresholds. I think once the price of Bitcoin passes $100,000, there will be a new wave of people that begin their Bitcoin journey and look at what Bitcoin is for the very first time. Because this $100,000 is just kind of threshold, I think, that we'll get to where people go, wait, whoa, what is this thing? Why is it $100,000? And maybe I should look into it. Like right now, the price of a Bitcoin is worth less than a Ford F-150. So, it's pretty hard to rationalize like spending some time thinking about what a Bitcoin is. But so $100,000, in my opinion, is a pretty big threshold for a lot of people. And then once it gets above $450,000, which is the U.S. median home price, I think that will open the eyes to a vast world of capital that is currently looking at, real estate as a store of value. And I think we could see a little bit of a frenzy where people are dropping other store of value assets to purchase harder store of value assets like Bitcoin to store their energy over time. And I've recently started thinking a little bit more about Bitcoin just in general as a discovery and not an invention, because really this mathematical framework and this mathematical structure is a discovery in storing your energy with the least decay possible. And I think that's why this gold narrative fits pretty well, because gold itself doesn't decay, right? Like it doesn't rust. It's a metal that it can stand the test of time, and it has stood the test of time. And thinking about a digital economy and a digital world, the internet's not going anywhere. If the internet shuts down, if the internet gets shut down, global EMP knocks out the entire internet. Well, one, you've got satellites that still hold the Bitcoin ledger. Thanks, Blockstream. So you've got satellites that are still holding the Bitcoin ledger. But we've got a bigger issue, right? If the internet goes out, all existing banking systems also don't work. You better have guns, water, and a way to get food. It would be a different world. So I think systemically, I don't think this thing's going anywhere. Might there be, something that takes over 1,000 years from now? Sure. There may be another discovery in quantum computing where we can, transport energy wirelessly, which is really kind of what Bitcoin is doing, is transporting energy wirelessly. So anyway, I don't know. I'm really excited about the future here. The concept of MicroStrategy holding these assets and being able to leverage these assets for yield at some point in the future is incredibly exciting. If you don't think that MicroStrategy is going to start earning a yield at some point in the future on this, you're crazy. I think you can even think of yield without even having to have somebody else hold your Bitcoin. They're going to start earning yield by just hiring the best talent on the planet. Like they're going to be able to use their Bitcoin and their stock to create the best, financial comp packages out of anybody in the entire stock market. So why wouldn't you go work for them and build out AI infrastructure and build the best products on the planet, because they are the most financially powerful company on the planet. That in and of itself is yield, right? Like you are yielding human assets to generate future cash flows. And yeah, their cash flow is relatively small relative to some of the larger players on the top equity market right now, but that's not to say that it won't be larger at some point in the future from other developments of the Bitcoin ecosystem. So exciting stuff. And with that, happy Friday, everybody. Cheers. It's been a ton of fun, and it's going to be a lot of fun. I think the next Q4 is going to be insane. 2025 is going to be a lot of fun, and excited to go through it with you guys. Cheers the weekend. See ya.